Welcome back to Getting Past the Premium, everybody. Excited to have everybody on this one. I think Andy has been on the show before, right? But
Correct.
I'm excited to have you back on, man. We were conversing on LinkedIn, I think it was about what you're currently doing, which I'm going to have you get into. But I think, a lot of people probably listening know who you are, right?
Sure.
From a lot of the marketing in the past agency you've been in, a glove box, etc. But start with kind of your background, how you got to where you're at today, and then what are you doing with FirstChoice and MarshBerry where you're at right now?
Yeah, nice. First of all, I appreciate you having me on. It's always good to kind of give at this point really a status update on kind of what I'm doing, where I'm at. But you have a good platform to kind of do that, so I appreciate it.
Absolutely.
Um, I've always been in the insurance family. My dad started an agency back in 2001, so I kind of got to watch that from a younger age. I was like in my teens at that time.
Yep.
I would help him in the summer months, like doing applications on X dates. So like helping call clients that didn't move forward at the time and kind of re-upping their application and potentially getting them a new quote. My dad would pay me about $20 a pop on getting those applications in the door, which at the time when you're a teenager was excellent if you walk out with 100 and whatever bucks a day.
Yeah.
So I got to know kind of the very simple kind of the basics of what insurance could be at that point. And then my dad would come home from a long day's work and just after dinner be at the kitchen table making calls,
Yeah.
from the hours of 6 to 8, getting new prospects in the door. So I got to hear his business voice and always made fun of him for that. Because you have your standard voice, and then you
Yeah.
jump on the phone with someone, and you got your business voice. I was always giving him crap about
Oh
that.
yeah.
Um, but then went to college, came back, didn't want to do insurance. Who does?
Yeah. No,
uh,
literally
you
nobody.
yeah, you don't really dream about it, but
Yeah.
you know, and then worked at a software company right out the gate, actually. So that's interesting given my background. I did
I
that for a
actually didn't.
year.
Yeah, I didn't know that.
Yeah, I worked at a startup company, software company down in downtown Denver. Formerly, well, I should say the former CEO of Oracle, which at the time was Sun Microsystems.
Yeah.
So Sun Microsystems was acquired by Oracle. The guy who started Sun Microsystems, Scott McNeely, I was kind of his assistant, if you will, at this startup company called Wayin, Wayin. Oddly enough, it's like this app that you can go on. It's not even really around anymore, but it was the original like sports betting app without actually putting money into an account and like betting on something. It's like, oh, I'm watching a game. I can give my opinion or my take or vote on what's going to happen next or what's going to happen in this game. And you get like some points and all
You're
that
gonna
stuff. So
weigh in on the game.
there you go. And they also had it for like The Bachelor and what's gonna have, who's gonna be picked and all that stuff. So it was a little bit of everything. I was in the sports department, if you will. So I would go out and get like schools, like all this big universities to be a part of this software. So that was a really good experience, though. I was kind of doing a little bit of everything. So then my dad came to me a year into that role and said, "You're not getting paid very well over there," which I wasn't. He offered me $45,000 to come work for him, though.
There you
I
go.
was like, yeah, that's a nice
Yeah.
pay increase right
Yeah.
there. So at the age of what, 23 maybe, I went and started or worked at the agency as a marketing director, which entailed me really being boots on the ground and going to see really lenders. I would get to know that kind of lead generation operations and how we would build an agency based on that lead generation flow. And so I was 4 or 5 years of just always being in offices generating leads for agents. So we had a team of, oh gosh, we had 10 to 15 depending on the year, inside sales reps. Excuse me, I'm getting a call. And then we had at our peak we had 100 outside sales reps. So in total, like 100 to 125 producers for the agency,
Yeah.
which is pretty extensive. And then my role was to feed the inside sales reps leads and train the outside sales reps on how I'm doing it so they can go do it themselves. Did that for 4 or 5 years and then kind of
And
moved over
hit
to
on how much you scaled that real quick.
yeah, I was generating 150 to 200 leads a month, just mortgage broker leads, some
And
real estate.
then the agency as a whole.
The agency was writing anywhere between 1 to 2 million in new business premium a month. And that was 99% personal lines. We didn't really do commercial.
Yeah.
So yeah, it was It was a nice growth phased agency. I mean, we hit 100 million when we sold in 2019. So that trajectory started becoming a reality of like, we're building a machine here. Are we going to keep going? Are we going to bust through the ceiling of like where we're at and do the next phase of what we want to do? Myself, my brother Ryan, at the time, my business partner was my brother-in-law Caleb, and then my dad, of course, was the president of the agency. So the four of us were really running the show in different roles. But yeah, we just kind of my brother and I specifically were kind of butting heads with my dad on how to like take it to the next level. We couldn't afford to buy him out of his role; like he wanted to kind of semi-retire. So we just sold the private equity and moved on.
Yeah.
And that's where Ryan and I started Glovebox with our business partner, Sean Mulhern, who is our top producer at the agency. So we kind of took him away from the agency and started Glovebox, which I'm sure that everyone's very familiar with that.
Yeah.
So yeah, so I did a 5-year stretch with Glovebox. It was an incredible experience. The hardest thing I've ever done outside of being a single dad. And yeah, so but then kind of realizing that I'm doing both at the same time, you know, being that dad at home and
Yeah.
being trying to be a leader at the company. And it was challenging to continue that life. So I made the very difficult decision in talking to my brother to do the right thing and step away from Glovebox, just to do right by my family, do right by the company, and just do walk into a different role. So and that now entails being with FirstChoice, which is a premium network. It's actually the #1 network in the country for premium aggregation.
Which
Owned.
many people have probably never heard of, by the way.
Correct. It's an East Coast based network, based out of Richmond, Virginia. Also owned by MarshBerry, which most people, I should say, a lot of people know who MarshBerry is. They're a market leader on the M&A side of the house for advisory, so like advising agencies to when to buy and when to sell and how to kind of helping along that process, or perpetuation, of course. So they acquired FirstChoice, and it was a really I would say it was a really interesting acquisition, because they're not actually going in and wanting to buy agencies that are a part of the network. They're just trying to help advise agencies to, like I said, buy or sell or perpetuate. So it's been a really humbling experience to see this side of the table versus what I've always been doing before. So that's kind of where setting the stages.
Yeah, no, for sure. And well, I wanted you to give that background because you got a lot of experience in various different areas of the, say insurance ecosystem. And, now on, I guess I would call the network side for lack of a better term, but
Yeah.
there's several, I guess, networks out there, but not necessarily what FirstChoice does, but just what's your initial impression of how or why an agency might want to consider, joining one of these network aggregators, whatever you want to call them.
Nice. Good setup there.
Yeah.
Yeah. I strongly believe that all agencies should be a part of a group, especially when you're not giving up commissions. You get to remain autonomous in how you operate. You get to hire, fire, train however you wish, use your own systems. You're not locked into any specifics, right? You don't have to report any production. It just kind of, you're a part of something, and these people are silent partners. You can lean into them when you want. You can focus on how you operate outside of that. FirstChoice is unique in the way they handle their business because, well, most networks are known for aggregation for better commissions,
Yep.
potentially profit sharing and growth bonuses. Market access is a big thing, of course.
Yeah.
So those are kind of the two core pieces that any network's going to really provide, depending upon which contract they have with these companies. FirstChoice is unique in the form of we have a risk placement team, so it's kind of treated as an underwriter, where you could send a piece of business to our team. They're incentivized to place it for you. It's your book, it's your client, you own it. And so that's kind of a nice option to have, as like another option. We have a VP of technology that comes in and assesses your software, your website, your SEO, helps you understand where you rank and all that good stuff. So that's some nice advisory there. A director of education that comes in and kind of gives a series of webinars teaching producers, leadership, CSRs, etc., on various topics, which is really nice to have in your back pocket.
Yeah.
Our member portal is really cool because it actually entails a lot of MarshBerry resources, and MarshBerry, given that they're a leader in kind of market intelligence and knowing what's going on out there, is something that's provided inside of the portal with a series of blogs that are really insightful. They tell a lot. They tell a good story about what you should know in the industry that you're not going to get just by Googling. And then HR resources, things like job descriptions and compensation plans and, organizational charts and all these things that you should probably be aware of as you're building your agency. As part of a membership with FirstChoice, you get a regional leader. In my case, it'd be me. Given my experience, I feel good about being an advisor for agencies with, talking about gaps and overlaps in their operations and their processes and kind of where they should be looking to refocus. And of course, with most networks, you're going to get like vendor discounts and stuff. Like we work with specific vendors, very specific about that. And then lastly, just being a part of that MarshBerry ecosystem at any point where they're trying to catch you in the middle of your journey, help you realize your aspirations, and kind of helping you get there. So that was hopefully a good summary of kind of what we do.
Yeah, no, that's sweet. It brings up several different topics we could discuss, but maybe paint the picture for me about what type of a firm might like at what stage, whether that's size or just size is kind of irrelevant, but stage of the business, what might somebody want to consider FirstChoice or just really any network arrangement, let's say. Why would they, like, at what stage, what are the things their agencies at this point, what are the things they should be considering? And this might be an option to consider, I guess.
FirstChoice aside, if we're just talking as a broad network thing, I wouldn't just say that you would join a group just so you can have as much access as you can. You're going to be a little bit more specific. Like, I'm looking for this market. This is what I know you guys do well. Can we go seek that out together? Because it might be that you're going to have better leverage or better opportunity if you were to do it with a group versus doing it by yourself. Like, you're going to be treated a little bit differently. There's some preferential treatment there for what it's worth. But more specifically, like FirstChoice, we are typically working with agencies 2.5 million in revenue and above. So much more established, to be honest. Like, we do take scratch agents, but they got to be having a growth mindset with a background in insurance and they know what they're doing. We're not going to be training them on how to quote and sell. So there are networks that might help with that. That's not FirstChoice, and that's fine. There are major things I would want, because it's on my mind, that I want to point out. And again, not FirstChoice specific, but if you're going to join a group, you're looking for things like, what's my exit clause? Would it cost me a lot to leave? Am I handcuffed to this group for a long time?
I've heard a lot about it. I mean, again, I've never been engaged with them. I think those are big things, right? That you got to be considering.
It's a big deal. If you're signing your life away and you didn't realize it, and it's happening. It's sad. The other thing would be commissions. Don't let well, I shouldn't say it like that. I would be cautious of allowing some group to take my commissions. They're yours, right? So keep 100% base schedule commissions with your company contracts. Like, that's just how it should be. And then if you're really looking to scale, having some certainty behind your end of year profit sharing. There's some groups that get guaranteed profit sharing. So with certain companies. So you want to see who those are. Does it make sense to join just for that alone? And if I can kind of, understand I'm going to be getting X guaranteed in return on investment there. Now you can plan ahead. You can hire the right people. You can bring on the right software. You don't have to feel sweat or pressure or anxiety about making moves to grow your agency. So that's kind of the few pieces I would look at with joining any group.
Yeah. Well, and I kind of look at it too. I mean, I've talked about this a lot just on social media. I'm usually talking like individual producers, but like the importance of a coach or the importance of a mentor, the importance of somebody that is at a level that you want to get to, right? And engaging with those people to say that you can accelerate your growth either personally, individually, or as a company by getting insights from those people that have already done it, right? There's no reason for you to wade through the fire if you can talk to somebody and say, what are the landmines I should avoid, right?
Yep.
And I feel like, with the right partner, I don't know if that's what you'd call it, the right network or whatever, get access to a lot of those insights into, hey, I'm here today. Here's where I want to get to. what are the resources and things I need to take the next few steps, the next level
Right.
up, right?
Yeah. And kind of along those same lines, to me, it's like they should be a silent partner, right? So we're not trying to be in the limelight. We don't want
I
to.
didn't even know it existed. I was telling you that before. I'm like, I know a lot about MarshBerry. We've engaged them in certain things, but didn't even know it existed. So yes, it's not in the
Sure.
limelight.
Yeah. And I think that's how you should be assessing, these groups is like, what are they really doing for me and how are they treating me?
Yeah.
So, yeah.
Yeah. No, I totally agree with that. I think there's a big need for it in the market, because there are challenges at every level, right, of growing an agency, and they're different at different stages. And it was funny you mentioned the preferential treatment from carriers is a very real thing, and I've learned that over the years. I'll never forget we had a underwriter. We were competing on an account. One of the big national brokers, was just directly telling the account, hey, with that carrier, we can get better pricing because of our volume. And of course, we're sitting there going, no, they don't. Like rates are set at the state level. I'm like, they don't get preferential treatment. I remember we had the underwriter field rep in, and we were like, come on, that like you got agents out there saying this. He's like, well, do you want me to be honest with you, or do you want me to tell you what you want to hear? And I'm like, well, be honest. He's like, absolutely get preferential treatment in their
Heck yeah.
pricing. Like,
Like
I'm
they
going,
just look at dollars and cents. Like, is
here
it
I am,
profitable? Is it
yeah,
not? Yeah.
I'm a
So,
naive little insurance producer here, and he's like,
right.
yeah, 100% do, and you probably
Yeah.
get preferential treatment over a scratch agent, like and I'm like, wow, I guess I was appreciative of the transparency, because it makes sense when you ultimately look at it. It makes some sense, but because there should be, in theory, right? They should have more experience with the book, more experience with that firm, more
Yeah.
experience with their results, and more confident in the results they can drive, et cetera. But that is a very real thing, and I think it can't be overlooked in these types of arrangements. So, um, what are so you're talking to a lot of agencies right now. What are some of the things you're seeing out there that are common themes that agencies are either struggling with, or take it either way you want, struggling with, or leaning into and taking advantage of to scale quicker, grow quicker, uh, provide better service, whatever you're seeing.
I think being forced to diversify how their breakdown between personal and commercial and the niche
Yeah.
products that they want to focus on, what markets are they looking at, being forced to do that versus like naturally gravitating toward any specific avenue, and now changing their model, like having to hire certain types of producers, train a different way, bring on CSRs that are a little bit more educated so that they can retain clients better. So I think that's the struggle. What are they seeing success with? Well, if they find niches that work because of their lead sources, because of the way they've always been operating, they can like pivot a little faster than others. They've locked into a model that's sustainable for a long time.
Yeah.
Now it's not just like a window of time that they're going to be operating this way. It's opened up doors to now add, divisions, if you will, within their firm and giving them options long term. So I think it's like sustainable growth because of like being forced to do that and being able to pivot quickly. And now they've found a way that's going to work for a long time. Versus those that are having a harder time with it because they don't have the funding to do it. They don't have the revenue in place to be able to do those types of things quickly. And I'm concerned that those people that I'm talking about on the latter half here aren't aware of what else is out there. They're not doing their research to find out like what can I do to help? What can other
Yeah.
people do to help? Like go seek out advice. You're not an expert in everything. It's okay. Neither am I, but like I know where to help you. I can either point you in the right direction or be the solution for you here. So that's kind of what I'm seeing.
Yeah, no, well, that goes back to my point about, hiring a coach or finding mentor or whatever, finding resources like you guys or whatnot that, can accelerate the learning that you need to
Mhm.
achieve.
Yeah.
Um, one of the things you talked about in there, I would summarize as finding and training good talent, right? Image service people,
Yeah.
producers. Is that something you guys help with? Or you mentioned the director of education, but is that like directly something you guys are helping with?
That would be more on the MarshBerry side of the house where you would have to hire them as like your advisor on how are we going to go seek out these people? Who are we going to help identify as good people for you to potentially bring in? So yes, that's not a first choice benefit. That is a MarshBerry thing, but we would get you connected to our ecosystem within, right?
You
So yes,
mentioned
the answer
director
is
of
that.
education on like, is that doing like helping train your people with like webinars?
That's more like preset webinars that are evergreen trainings that are just available to you at all times. So you can like go seek out the topic we're looking for. There is a series of videos helping agencies learn
That's
about
huge.
X, X, and X. So that's just there. You become a member, you get access to all that. And then that's going to continue over time. It's going to evolve with like however the market's turning. So that's
Yeah, I mean,
definitely.
we battle that, of how do we train new people? And if you're growing quickly, you're hiring a lot of new people and you have turnover and all the things. And, there's a combination, right? If you need to hire with some experience for a certain percentage of your roles, and then you need to
Pay
hire,
for it.
yeah, you're going to pay more, which is rightfully so, right? They have the education, they have everything that, that you're paying for that. But because of that, you also need to be able to bring in newer, greener people to the industry and be able to train them, which is not an easy task in our business, right? There's a lot of information you need to know in order to effectively work with clients and do, a very important job in the insurance industry.
Think along those lines, if you hire in groups instead of individually, like I'm going to bring in a really qualified, highly experienced, CSR. I'm going to bring in a fresh green right off the streets, kind of like at the same time, and have them kind of be grouped together and in their own class of hiring. And then they can kind of, admittedly, you're having the experienced one kind of help train the new one, right? But it's like a good way to kind of grow. That new one may not work out, but it gives them a chance to really succeed based on the value that you've invested in with this experienced person. So that's how I would handle it. Hire in groups.
Did you guys do that at the agency?
Yeah, we did. Now we were more established, right? Because we had like 35 CSRs, so we didn't have to hire in bulk. But yeah, initially that's kind of how it works. Is like,
Yeah.
you're typically paying a little bit more on the front end for an experienced person to really help out with your training long term. And producers that didn't really work out on the sales side can maybe go over to the service side because there's two types of people in the world. So
if they're willing to
yes,
drop that a little bit and
ego.
not everyone has it, but in sales that can be a good thing sometimes. No, I think that's great advice for people. Particularly starting out. I think it's difficult sometimes to bite that bullet right up front of the investment you're going to make, but man, I can look back on hires where we felt like, I'm going to put air quotes, so we felt like we were getting a deal on this person. Like, wow, man, we could get them for that salary or whatnot. Like, absolutely. And most of the time, those were underperforming folks.
Yeah, get what you pay for, kind of thing.
Yeah, and there's a reason, right? And that's not how we should be looking at it, anyways. I mean, we really evolved that thing. It shouldn't be, what can I go hire that person for? It should be, hey, I have a set of duties I need this role to do, and I compensate in a certain range based on experience, based on how they're coming in for that role, right? And you try to be as consistent as you can. Not that you don't go outside of that for unique individuals, but you try to be
Yeah.
as consistent as you can. But then also the investment being, if you're at a stage where you need experience because you maybe are starting to build your team, or you have a younger team, you might have to invest that extra money to get somebody that can come in with the experience and all, somewhat tell you how to do certain roles and tasks, or at least
Yeah.
give you feedback, and you don't have to specifically train them. I mean, again, there's two models to doing it, but I think a combination is really effective. Like exactly what you had mentioned. It can suck sometimes to make the investment, but long term, your investment's well worth it if you get the right people.
Right. And kind of veering over to the production side versus the service side, if you were to hire the same or have the same concept of hiring in classes, I would actually do 3 producers at once, because really probably only one of them is going to be with you for a long time. And those are, and that's a little different too, because you're typically not giving a base salary in that situation. If you are, it's small, so you can kind of afford to do that. But it's all about training. And if you kind of just like put people in front of a computer in a phone book kind of situation, it's not going to work out. Like you got to be dedicated to being with them for 90 days and like helping them be installed into the process, into the system, and doing it well. And leads, I will harp on this forever. Just like, how are they getting their leads, and focus on that marketing lead generation aspect for the first 90 days, and then go from there. Like, you can't quote and sell if you don't have any opportunities. So, and you can't like turn on the lead faucet for the most part, unless you're buying leads, but that's not my preferred outlet.
Yeah.
To focus on the professional networking stuff. And I teach a class on that, and um, as well as like a marketing 101, like what other lead sources should you be identifying. So that's another piece that you get with like FirstChoice, is like my advisory, right? How am I going to help you get better leads in the door based on experience and what works? So,
Well, I don't know if it's your class, I'm sure you based on it, but I saw you did a hour-long presentation at one of the,
oh yeah,
probably multiple of the conferences
yeah,
that you're at, but basically breaking down your whole system for generating that amount of leads,
yeah,
which was very in depth. I mean, it was like a blueprint to,
right.
being able to do it,
What
right? So I
works?
imagine
Yeah,
what you're talking about your courses now is
yeah,
it's probably more in depth. So I would encourage anybody to inquire about that because it is very legit. But
mhm,
I think you're spot on in what you said there, because oftentimes, or at least how I was brought into the industry, and I think many people were, is, hey, you're hired, get your license, and then here's a phone book, go figure it out,
yeah, yeah,
and that certainly one way to do it.
yeah,
But the more that you have perfected the system for how you as a company are going to go out and get leads, work those leads through your system to write the business at the end of the day at a certain percentage clip, the more successful you're going to be in bringing new people into your firm, right?
yeah,
Because you can teach them that system and it works. But what I think oftentimes people will do is they'll say, naturally, if you're growing a scratch agency or you're trying to grow an agency, you're probably the rainmaker. You're probably the one that sells the best. And your natural inclination is like, I just need to get another one of me to then take that sales role off of me, which is not always the case. Because if you haven't perfected that system, how are you going to teach them how you do it? Because you
nice,
just do it.
yeah,
And so it could be actually saying, I need to hire the service person or the executive assistant or somebody to take all these other duties off of your plate first to get that infrastructure built. You keep selling because you haven't, again, you're just good at it. You haven't perfected the system. And then you work on, okay, what's the replicatable system I can use to generate leads that I can teach then somebody new, right? It's kind
that's
of a
perfect.
rung
Yep.
of hiring, right?
Yeah, there's a section within that session I'm talking about that I teach, which talks about getting out of the production role at some point. But you kind of mentioned it perfectly. It's like you can't teach it until you perfected it. So, you know, you're right. Get the ancillary, admin type stuff off your plate first. Focus on the system, then perfect it. Then you can step out, or at least like start to crawl out of it
Yeah.
as you're bringing new people in. So because then you're actually building an agency and not just like trying to get production in.
What, you're
Right.
building a business, not a book of business. Is that
There you go.
saying it?
Yeah.
Yeah.
Nice.
Yeah, no, we've talked, like Brett Young and I talk about that at length on here all the time. It's like, and again, it's natural in our industry, right? You grow up or you build your firm. I mean, our firm was built that way with, I think when I started, we probably had 6 or 7 producers that literally everybody had their own individual book that had, a CSR, that probably certain things were done differently depending on the producer that was on that book.
Hmm?
It was very siloed in how you're running the business. It was more books of business, not, a growing, scaling business. And so we've had to spend a lot of time, kind of repositioning that to having the infrastructure to grow and scale a business, not just support to allow, Joe go build his book, which is much
That's
different.
where, oh, it's so different. That's where the value of an agency comes into play. You're looking at two types of models there. The one that you described that you've really evolved into, it's gonna be far more valuable long term than the one that, you're just kind of having multiple books of business within a overarching umbrella. So that's an important aspect of like how you're going to really turn into a long-term sustainable agency, right? Growing at that. So
Well,
yeah,
you
well
can't
said.
can't scale it, right? I mean, I'd even ask you, looking back at your agency days, like you appear, if I remember, you scaled that pretty quickly as far as volume and revenue.
Mhm. Yeah.
And I would imagine you weren't doing that by just saying, okay, I'm going to go out and hire the next, you know, person that can come in and just inherently do it, because you can't replicate that over time, right?
Mhm.
You could find those people and probably a certain number of them over time, but it's much more difficult to find them and then, not miss on one or two, all the things. But again, if you have a replicatable, scalable process, people can learn that, people can execute on it, and you can scale really quickly. You don't have to find the unicorn. That's what I'm trying to say.
Yeah. And you're gonna fine tune and tweak that process over time as well. Like it's not set in stone, but establishing that system is pretty critical. So I would say if you're in that stage, like put the pause button for a second, get those things off your plate that you don't want to deal with, focus on the system you want to build long term, and take the hit for the first 90 days of just like, the effects of that. But it's just knowing that you're investing in the agency. That's kind of how this is going to work. So
Investing
I
in
like,
your long-term asset. Yeah.
yeah, yeah,
So how does I don't know how the network model, I guess, works overall. I mean, I'm sure it's different for everybody. But you've mentioned like how first choice, partners, I can't remember the term you used earlier, but like how does am I paying a fee to first choice? Is it a percentage of revenue? Is it like how does that piece work? And maybe you can speak specific to first choice or if you know other models
yeah.
in the network space.
You're typically going to pay a monthly fee with any group. Some groups are going to take some commission, which again I kind of advised against. Some are going to take some profit sharing at the end of the year, and that's kind
Yeah.
of how they make their money. We're very simple, just a $500 fee, flat. Depending, it doesn't matter its size. You could be scratch or 100 million in premium. It doesn't quite matter. And so no startup fees there. And then a shared profit share at the end of the year. So 70-30 kind of split depending on the grid that you hit. So like at DWP, if I write, for 0 to 500K with this company, I would get 70% of the profit share. If I am higher than that, there's a grid. So you get 75 or 80, etc. So that's kind of how that works on the profit sharing side of the house. And that's really why initially be interested, because I want that profit sharing. I want to ensure that I'm going to get it. And with a group, you have more premium you're talking about.
Is
You're
it
writing all.
70-30 on, so you're talking contingency override income there,
Yeah.
right?
Yep. Not
And th-
commissions. Yep.
yep. And then is that on the group as a whole?
Yeah,
So
exactly.
70-30 is, and then,
But you individually, your agent, so like let's say we're talking Progressive as an example. The group of 600 plus members qualifies for profit sharing. Great. What did you write with them? You wrote 600K in premium with them? Great. You qualify for 75% of your portion. Okay. So
got
take
it. So kind of pro
the lump
rata.
sum, you look at you individually. All right, this agency wrote this X in premium. You're getting
Yep.
75% of what's owed. We're gonna keep 25.
That makes
Okay.
sense.
Yep.
Yep. So you're gaining the volume immediately,
Yeah. Well,
on,
and you qualify more
yeah,
frequently if you're part of a bigger group versus individual. Right.
which that's a big deal, because we have a lot of carriers that, we hover around, say, a $500,000 book or something like that.
Yeah.
And a lot of those can qualify for contingency profit share agreements, but it's very difficult to sustain any losses in the book to actually
Yeah.
qualify because it's not enough volume to
Hmm.
really get a meaningful, contingency back. And so once you get to that level, I mean, I know there's many other firms engaged, but you kind of outpace that where those losses can be sustained because it's going to happen, right? But as long as you're managing the overall book, you can sustain some more of those losses and still qualify for that profit share agreement, right?
Exactly. I think it's just always worth looking at, can you do it yourself, or is it better just to kind of ensure that I'm going to get it through a group? And that's why I said, like, I think every agency should be a part of a group, but for a variety of reasons. It doesn't necessarily have to be because of, the revenue side. It could be sort of the advisory side or the
Yeah.
access, the risk placement team I talked about, et cetera. So there's just a lot, like, and there's hundreds of groups, I think. There's really good ones, and there's a wide gap there between the rest, but that's just because of like how big they are and what the contracts they have with these companies and what they're offering with like their staff and how they operate with like value added benefits too. So, I'm always very no pressure, just telling you the information and you look around and do your thing. But I know that what we offer is pretty damn good. So a lot of cherry on top for what we offer.
Yeah.
So
So well, that's what I thought when we were just messaging back and forth. Again, I didn't know about it, and it seemed,
most don't. Yeah.
the little bit of education I had around kind of networks, it was quite a bit different. I just thought it was
Yeah.
important that we have that discussion because again, I think it's sometimes different arrangements get different or bad raps or whatever because of a certain, I don't want to say individual in this case, but a certain bad actor, right? Or bad actors. And I know like the contract piece of it on the network side has gotten quite a bit of coverage or whatever of how sometimes you can get in trouble with those. But that doesn't mean that firms, especially looking to grow and scale, shouldn't look to these types of arrangements as great outlets to help them partner with all the resources that you've been talking about to get to that next level, right?
Yep.
I just
Yep.
think sometimes people think, that's not for me because
I've heard
firms,
that a lot. I've heard that a
yeah,
lot. And the notion of like having to aggregate at all, like aggregate everything. It's like an all or nothing thing. It's not. You can pick and choose which ones you would aggregate. You can literally aggregate nothing if you want, if you don't want. You just want all the other stuff. That's fine too. It's what's a
yeah, that's a
bit,
good point. Yeah,
yeah, it doesn't have to be all or nothing. And it's like for $500 a month, pick and choose wisely, but it's a give and take. Like whatever you want to put in, great. Just nothing, that's fine too. Use the other stuff. So that's what I like about it. It's very free for all.
yeah. So what are you helping firms do on the front end? If somebody calls you and says, "Hey, I want to learn about this," like I mean, I assume you're helping them kind of wade through some of those conversations to figure out what they might be able to take advantage of and what
Yeah. It's a lot of discovery. What's working
yeah.
well? Great. Let's latch onto that and enhance it. What's not working at all? All right, I think I have solutions there. We talk about growth strategies. We talk about lead sources. We talk about producers, CSR is the growth model. What is the agency's aspirations and goals? And I plug in pieces along the way. And then there's a summary. It's like, okay, you named 10 things here where we can help. You named a couple other things that you're doing well at. Keep doing that. And I can help you along the way if you want. It's complete advisory. It's just total recommendations. And if you want it, great. If you don't, no problem. I think at some point there's going to be a reason they would want to join a group. It's just deciding which one and can they get out easily. That's a big part, like we
Yeah.
talked about. Don't lock yourself in for, long time. And just knowing that and by the way, when I was at Glovebox, I was always really interested and passionate about what networks are doing because I knew what they were back at the agency, but I didn't believe in them then. And then I became, a startup founder or excuse me, a SureTech founder and kind of realized what they actually can be. And now I'm actually in the seat and they're way better than I ever thought. So it's like this evolution of myself. I had to learn, just like you're talking about, Elliot. Like you didn't even really know. So I think most people are just blind or they're naive to what really is going on. And that's okay. I get it. I was the same way.
Yeah. Oh, 100%. And I just think it's important. There's a lot of, like I said, sometimes the negative things, are the ones that drive conversation, because
Yeah.
I'm just pointing out myself. I've seen a lot on social media where, again, I've never evaluated one of these contracts, but I know that there's a clause in there that says, that
Pay a
you're
big
locked
fat
in and
sum.
whatever. Yeah.
Yeah.
And you seem to hear that, but that's a good advice for anybody though, to always in any contract for a partnership or anything you're joining, look at the exit clause.
Please. I'll
Always
point it out
first
every
thing,
time.
first thing
Yeah.
to look at, because
Yeah.
you should always know, hey, if things go south, I don't plan them to. Everybody's got great intentions here, but
Yeah.
if it goes south, how do
How's it
we
gonna
all get
work?
out of this thing? And
Yeah.
it's great advice for anybody to take into any contractual arrangement.
Also, and I'll leave you with this probably. If you join a group and all they're doing is market access and commission and profit sharing, that's just not enough. That's just not good. That's like this bare bones.
Yeah.
So it'd be asking the right questions to get more out of it. And I keep hearing people that are with groups that sign up and they get the the monetary value out of it, but then they don't really lean into anything else.
Yep.
Where I'm in the back pocket once a quarter saying, what about this? What about that? We should look at this. We should look at that. It's a plan A meeting. Let's get some more,
Yeah.
let's build some momentum off of this thing. So don't just join a group to let it sit on the sideline and do nothing with it. I get that it's like an extra thing on your plate, but it's worth it. So it's
Yeah.
kind of
100%. So I think that's a big value add or advantage is having somebody like you that can prod you along. But I think also, if you're out there and you're going to make this decision, if with anything really, you need to engage it. You can't just expect I'm going to sign up with First Choice and all of a sudden my business is going to grow by 30%. Like too
just
many
like a
things that
software, by the way. You
I
don't
was
just bring on a software. Yeah.
I was just going to
And you know
go.
that well.
It's, you could have shiny objects and everybody, this is so cool. And you bring it on and then it just sits there. I mean, we've all been there, which is why I'm saying it is that, if you're going to make this type of a decision, any investment really, just understand how you're going to execute on it. The execution is the hardest part,
Yeah.
100%.
Yeah.
And, knowing how you're going to do that, who's going to be responsible for it, et cetera, is super key. So, um, we've covered a lot of ground here. What, anything on your mind that we haven't really hit on that you think would be impactful for folks to think about, to know, whether it's about First Choice or just in general?
Yeah, retention's one thing that's on my mind. How are you handling your retention? How are you handling renewals? How are you handling the hard market when it comes to hard conversations with current clients and their rates are all going to go up?
Yep.
Are you getting ahead of it? Are you being offensive about it? Are you not just waiting for the phone to ring with an angry phone call? Or are you just, so my biggest thing is like agency owners, educate your staff on how to turn around and let them educate your current client base. Because if you can get ahead of it, set the stage, have some resources and scripts to help clients feel better about where we're at. We're all in this together. You're not just a rare instance client. Like, here's what's going on. I think that helps get through this hard market challenge right now. And so it's going to soften. We're already seeing little hints
Yeah.
here and there. So it's okay. And like, I'm going to say this, but I kind of feel bad because I'm not in the agency anymore. So I can't really talk like that anymore. But I'm going to say like there's a lot of worse situations out there. It's like, I know that you're having a hard time placing business. I know that this is like the most challenging time in the industry that we've probably seen in a long, long time. But you're getting paid more than you ever have. And there's silver linings all over the place. Yeah, if you can retain it. And so, yeah, you're working a little bit harder for your money, but it's just, there's light at the end of the tunnel. It's going to be okay.
Yeah, I totally agree with that. It sounds like, by the way that you said that or walked through it, you're probably in my camp on this, but I get into quite a bit of this exact conversation where folks, my perspective is be very proactive with these conversations. Let the client know well ahead of the renewal before they've ever seen anything, what's going on in the market, which means you're gonna have to talk about pricing being up a certain percentage and what's going on with different carriers and those types of things, and be very transparent and upfront. Have your script, like you meant, understand what you're saying and what's going to resonate and not with a client. But I get in battles where folks say, well, why would I want to do that? That's just going to tell my client that they should go shop with somebody else and so on and so forth, when that is certainly a possibility, right? But at the end of the day, if you're doing your job and you're having this discussion, I mean, what we found is most clients are like, wow, thank you for having this discussion. I had no idea how this works. Like, that makes total sense. Like, I know that, yeah, things are going up and wow, okay, whatever you can do, like, just let me know. I appreciate your work on it. It's usually like the responses that we get, not all the time, but the flip side of that is you're risking a client getting a 35% rate increase when they had no idea or expected. Like, what do you think their response is going to be at that point? Because then you
Yeah, it's
sound
not pleasant.
offensive,
Yeah.
So anyways, I figured I'll let you respond to that, but that has always been my kind of battle on really renewals in general, but
Yep. I
specifically right
mean,
now.
if you're true advisors like you should be and not just, slinging policies, um, there's a opportunity at hand to like take care and coddle, I guess, your client base. and get them familiar with what's going on. Like you can cater to like like what's going on in the market, and turn around and give that information to your client base. So I think that's important. That's that's on my mind heavily.
Yeah, that's great.
So.
That's great. All right, man. Well, so if somebody wants to learn more about FirstChoice or get in touch with you, how can they do that?
LinkedIn's my favorite, man. A lot of people got upset about the past 5 or so years of spammy inboxes instead of LinkedIn, but I think they've kind of. I don't know about you. I've noticed a major decline in spam messages in my
Yeah.
inbox.
I still
So I
get
think
like one of my designations is AIP, and I still get the hey AIP. I'm like,
like
that's a bot.
bot, yeah. Anyways, DM me on LinkedIn, connect with me there. Don't just like follow me, actually go connect with me. You got to go dig a little bit if you want to do that. But I like voice messages too, meaning go download the LinkedIn app, find my profile, click on the message button, and then actually send a voice message. You can only do that through the app. Um, and have an honest conversation about where you're at.
Yeah.
So
Love it, man. Well, thanks for your time today. This was just even educational for me. So I think there's a lot of people out there that probably took a lot of value in learning on what options are out there for different firms as they're growing and scaling. And so I think FirstChoice, seems like a great option for folks that want to take advantage of that. So reach out to Andy and learn more. And then I just appreciate the time, man. Appreciate you.
Thanks for having me on, dude.
You got it. Talk soon.
See you.